Hello, my name is Teresa Bockwald and I am co-founder and CIO of Vibato LLC. I am a Sarbanes-Oxley internal controls process reengineering subject matter expert. I have performed over 100 of these implementations around the world and continue to work in this every single day. I've been performing this type of work for the last 12 years. I believe I have a perspective on the presidential candidates that needs to be heard. So I'm taking the time to perform this video blog and make this recording however uncomfortable it may be. I've also published an open letter to the presidential candidates to express my concern over what they're doing and to challenge them to a public debate over their perspectives. The reason I'm doing this is because Sarbanes-Oxley was enacted in 2002. It was brought forth because of the Enron, WorldCom, and all the other financial debacles that were going on at the time, and still go on today. But at that point, the intent of Sarbanes-Oxley was to say there needs to be procedures at your company to verify the financial legitimacy of what you're publishing in terms of numbers to the investing public. That's the idea. There wasn't something like that beforehand. There was the requirement to have your financials audited, but unfortunately, for instance, in Enron's case, external audit, who comes in and is basically on the ground, is a representation of the shareholders, verifying that the numbers the executive team is producing, was the same as internal audit at that time. They both found problems because they were the same company. They didn't tell on one another, and they were being paid a lot of money, and it was a big scandal. And that's why that's with the Sarbanes-Oxley Act, that conflict of interest and having the same person say that these are the numbers that management is expressing as to be accurate, and having an external or independent person come in and say, do we agree with that? Are they telling the truth? Those two entities can no longer be from the same company because it's a conflict of interest again. So that's one of the items in Sarbanes-Oxley that was found to be a prudent idea, is to say that those two people need to be segregated. The other thing is, its intent is to say, as you go through the process of your everyday procedures, selling goods, services, whatever it may be in your organization, you have to have a stop in the process, and not a literal stop, but a check, if you will, in the process that says, okay, is at this point in time the number that's being produced accurate? For instance, if any of you have ever had your expense report reviewed prior to it being paid by your organization, that's Sarbanes-Oxley. You have an internal control in that process where you're saying, is it valid? Is it accurate? Is it complete? Or did someone try to pass off their motorcycle tires through their expense report or their lawn work, both of which I have seen post Sarbanes-Oxley. So the point of Sarbanes-Oxley is to take a step back for just a moment and say, okay, throughout the process, the financial number at this point in time is accurate. And then ultimately, at the end of the month, quarter, whatever date it might be, if that organization were to produce financials for stakeholders or investors, for the SEC or for, NASDAQ, New York Stock Exchange, OTC, the various companies or organizations who have an interest in looking at those financials and investing in that company for whatever reason, if they were to produce financials at that moment, they're accurate, at least to the extent that they have put their internal controls in and checked. There is not one number produced throughout an organization that is not touched by an internal control. Not one. So everything in the process should have the ability to be supportable, right? If you say you have $10,000 in cash, you should be able to support that with legitimate documentation that proves that that number is real and that it's not just a guess. That is the idea of Sarbanes-Oxley. Put in good procedures. Good numbers will come out of it. Pretty simple. Now it's turned into a big debacle, and the presidential nominees, the Republican presidential nominees, have gotten on this bandwagon of thinking it's trendy to say they're going to repeal this. And the reason I'm speaking today is because I think that would be extraordinarily ill-advised. Again, the financials that come out of public companies today, a lot of times are barely passable now. and they're required to have support for those numbers. What Mitt Romney and Newt Gingrich are suggesting is that the requirement to have executives or companies, employees, prove that the money they're spending, i.e. shareholder money that they are spending in their day-to-day operations, need not be supported, because that's a job killer. I don't see the connection between killing jobs and forcing people who are spending money on my behalf as a shareholder, or your behalf as a shareholder, forcing them to prove that they did the right thing. Do you? I don't see the connection. I don't see how it's a job killer. Now, I do know that Newt Gingrich has some very, very, very inaccurate presumptions about Sarbanes-Oxley, for instance, on his YouTube channel. He and his wife are up there spouting about some need to repeal it and it being a matter of life and death, which I find ironic, because some people, after the Enron debacle, when they lost their retirement savings, there were a few people who committed suicide because they knew they wouldn't recover. So if that's the kind of life and death he's speaking of, repealing Sarbanes-Oxley, I don't get it, but okay, let me run with that. So he says in his video blog that it costs the average company $4.4 million to comply with Sarbanes-Oxley. And I think the bandwagon they're on is that Sarbanes-Oxley is expensive and therefore a job killer because it's causing companies to not IPO because of the costs associated with Sarbanes-Oxley. Let me address that. If a company is going to IPO, you want to make sure their numbers are right. If you're going to invest in a company, you want to make sure that that's a good idea. That investment is going to mean something, because we learned with Enron what happens when it doesn't mean anything, when it's a joke, when it's a lie. So he's suggesting, as of today, it costs $4.4 million to get compliant. Now, again, I do this work every day. We've invented a tool set and product suite that makes this very easy to do. Some of our companies that we work for don't even have $30,000 in their bank account, and they're compliant. And I can tell you this much, that I've never had someone pay me over $500,000 to do an implementation. So his numbers are completely inaccurate. Now, granted, it may not be intentional. He may be a good guy, but if he's going to be our potential next president, he better have facts and not just guesses, because what he is literally suggesting that we all buy off on, in terms of having him elected and supporting his viewpoint. He, along with Mitt Romney, what they are literally suggesting is that there is no more need to have executives' expense reports actually substantiated by receipts or substantiated by anything valid other than their mere opinion. That's it. And don't forget, as a shareholder, you are an owner of the company you invest in. However big or small a piece, you own a piece of it. So to that extent, you are trusting the executives and the decisions they make to take care of that investment of yours and to use that money wisely. And the results of that trust are the requirement to produce auditable financial statements, if they're public, auditable financial statements that are supportable and that they can get behind, and that they have to attest to the validity of those numbers every quarter. That's part of the Sarbanes-Oxley Act. What Mitt and Newt are suggesting is that that needs to go away. There is no reason why they should have to have legitimate support behind the numbers that they are telling you are the reason why you should invest in their company. That's what they're telling you. So to that extent, I suggest this. I will pay Mitt and Newt $10,000 each to allow me to come into their organization. I'll pay my own way, I'll pay all my expenses, and I'll pay them for the privilege of removing all of their internal controls throughout their camps. That means removing the internal controls over their cash accounts, removing any sort of need for check and balance with the money that they have. And they have a lot of money. I'll remove it, because according to them, we should all be subjected to that standard as shareholders. We should all have to just trust that everybody's going to do the right thing. And even though I believe that's the equivalent of firing all the cops and just saying, there'll be no crime, because everybody will do the right thing, right? So back to my point. I will pay them each $10,000 for the privilege of coming out, and I'll give all their interns ATM cards. I'll give them all checkbooks. Because again, they're going to do the right thing, right? If they believe that we as shareholders should be subjected to that level of trust, why don't we give it a run on their camp first and see how well it works for them? That should be a no-brainer. That should be an absolutely. $10,000 in their pocket, and we'll see how well it works for them. Because I want them to experience the impact of their suggestions on the American public before we get to be subjected to their ideas and their ill-advised ideas. So to that extent, I'm offering them another $10,000 offer. My own money. I'm self-made. I'm the only person in my house, in my family, to go to college. My dad was a truck driver and part-time preacher. My mother was a secretary. I put myself through college. I have 4 degrees. I've owned 6 companies. I own this company now. Everything I have worked to get. And I'm not going to put it in the hands of somebody who I have to trust in order to do the right thing with my money. But to that extent, and because I know from where I'm speaking, I'll put it on the table. Newt Gingrich, Mitt Romney. I'll give you each $10,000 for 1 hour of your time. Have a debate with me about this topic. Publicized debate. Apparently, maybe I stand to learn something that I haven't learned in doing this all over the world for the last 12 years. Or maybe you stand to learn something about what it's like to actually get in the trenches of an accounting department in the middle of, nowhere, which I've done, been in places in the middle of the mountains in China where there was no running plumbing, but they were a NASDAQ-listed company, and see what it's like. Literally see what it's like to ask somebody to support the numbers that they're producing. And see how successful it is the first go-around or the second go-around when you first implement Sarbanes-Oxley for the first time. And I'm going to take you through what it's like so you can really get a real perspective instead of the one that you have right now, which I believe to be entirely bought and not based on reality from any way you look at it. Offers on the table, guys. Thank you.